Nadia, great to catch up with you. What are you looking for from that OPEC Plus meeting?
We want clarity of message. The market expects them to roll over the cuts, but the most important thing is how they communicate it. Is everyone on board? How are Russia and Iraq going to comply in Kazakhstan? That's what we want to know.
When you look at the communication coming out, do you look to potentially the plus side of Russia, or is it really going to be about what Prince Abdulaziz says?
Number one is what the prince says. Russia is in the middle of a war, so Russia will do what Russia needs to do to keep fighting in Ukraine. However, the communication on that relationship being intact is what is important, because ultimately what we've seen is Saudi Arabia has been forgiving Russia for undercompliance in individual months.
There's also other individuals who are under-complying, the cheaters per se. How is the kingdom potentially pressuring them to make sure they come in line?
Well, we've actually seen detailed ideas as to how compliance is going to improve. And that is, of course, this summer being led by field maintenance. So we have field maintenance happening in Kazakhstan. We have field maintenance happening in Iraq. I think in the medium term on Iraq, we still have the Svelland pipeline being out. We have the KRG producing around 250, 300,000 barrels per day of oil. But we could see that jump at some point. I think while this OPEC agreement is intact in terms of the level of cuts, 2.2 million barrels per day that we're seeing, we're not going to see any progress on that side. And it's much easier for SOMO, the national Iraqi side, to just say the KRG needs to hold back on that side. However, we have seen this compliance continue to slip month on month. And currently, we're in a tight Brent range of between $80 and $84.4 a barrel. If we get up above 90, that's where we think that compliance will really start to slip, and that messaging from OPEC would need to change, in our view.
Nadia, when you look at the prices, we've seen geopolitical risk premium ebb and flow throughout these Brent prices. Do you think there's any priced in right now?
Not really. We saw yesterday a potential escalation between Egypt and Israel, and the oil price didn't shift out of its very tight range. It was also on the low side prior to that. So we do not really see that being priced in. And as we've seen with the Houthis and what can happen on the shipping industry, an attack could really have an impact. But right now, people are ignoring that.
Well, I guess, Nadia, what would it take to actually spur that or create some sort of premium? And what would that premium look like given the ballast of U.S. production, given some of the offsets that we've seen? I don't know if you want to say come to the rescue, but at least suppress volatility in the price of crude.
Yeah, I mean, we are at a very low volatility in terms of crude. I think an actual attack on a tanker, closing down or slowing down escorted shipping escorts, of course, around the Straits of Hormuz, some sort of outage like that would have a real impact. Or if it were an escalation involving, the producers themselves. We saw this escalation potential between Iran and Israel, but really it was a tit-for-tat response and not creating any real damage on that side. As you say, U.S. crude has been resilient. According to the weekly numbers, it's at around 13.1 million barrels per day, which signifies a 600,000 barrel per day shift up versus those January lows where we had the winter outages. We actually think production could be higher than that this summer, another 100, 150,000 barrels per day. But when we look towards Q3 balances on the crude side, forecasters are seeing a minimum of a 500,000 barrel per day up to 2.1 million barrel per day draw. That builds up over the course of Q3, but that's where the market has big expectations for big draws. And then that U.S. incremental supply is really insufficient.